Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
You are listening. Today's sponsor is Audible. They're the leading provider of spoken audio and entertainment. Listen to an audiobook wherever and whenever you want. I do. For more information, to get your free trial, go to audiblepodcast.com/Lutz, audiblepodcast.com/LUTZ. To the financialsurvivalnetwork.com. I'm Kerry Lutz on 1590 WPSL. Looking at these markets, is the stock market topping? Has the precious metals markets bottomed? And what about energy? Well, one person I like to talk to when I don't know what's going on is Chris Vermulen, thegoldandoilguy.com. Chris, welcome back to the Financial Survival Network.
Hi, Kerry. How you doing?
All right. And it's been too long, but we got you now. Where do you see these markets heading? Are we going to see a flip in between gold and the stock market? Is that where we're heading here?
I think when it comes to gold being more of the safe haven than silver, I think we're getting very close to a flip in the direction. Gold stocks have they're starting to show some pretty serious accumulation. Of course, there's a trickle effect of investors around the world that are giving up on miners, so it keeps pulling the prices of miners back down, but we're seeing heavy volume buying into these miners. So we are seeing a bottoming process, and money usually flows into gold miners and silver miners before it flows into actual bullion prices. So the fact that we're seeing that happening in miners is a good sign. I think there's a topping and bottoming price action going on for the SP 500 or the broad market in general. And I think the top is going to take some time. I think it could play out over the next month or so. Tops are usually a process, not really an event. So it's going to take some time for this upward momentum to stall out. And as that happens, we're going to start to see gold and silver bottom out, which I think they're working on a bottom as we speak. But again, it's going to take some time. Tops and bottoms aren't events, they're processes. The momentum has to stall out. You have to see a shift, and you got to see prices start to make new highs and lows in the gold and silver before you can really kind of jump on that wagon. Picking bottoms and tops is dangerous, obviously. So you really have to wait for this momentum to stall out and start to reverse.
Not for the faint of heart. And the volatility that we've seen in these precious metals is just kind of breathtaking, where one day gold is down $30 an ounce, and then by the afternoon it's up 30, and then yesterday it was up and wound up down. So, and today's May 23rd, it's up again, but it's kind of losing a little steam. It's really interesting to see the increased volatility, which is often a precursor to substantial movements.
Exactly. I find it exciting. I love seeing big price action because it means you're having massive panic, whether it's panic buying or panic selling on a low. It means there's a shift coming. And right now there's a struggle between the bulls and bears. And we're seeing a trickle effect of people getting bearish on metals and miners, and they're selling out. But we're seeing big money. If you look at the volume on the futures and individual miners, there's big money rotating in. But there's just so much selling momentum globally as individual investors are just becoming bearish and selling it. Every time these big guys step in and push prices up, there's just that trickle effect of steady selling, pulling it back down. And that's just the rotation of shares from weak investors into the hands of strong investors. And once that rotation is finished, there's going to be a major foundation put in for gold and miners that could really post some huge gains going forward.
Yeah. And what's your take on the divergence of the physical gold market from the paper gold market, as it were, the COMEX? Do you see that as being a real factor, or are we seeing something that doesn't exist?
I don't really read into that really at all. I focus on just the futures prices and the volume behind it and the momentum, and I focus on the actual mining stocks because I find they're very closely related, and one usually leads the other. I don't really go into the paper versus the actual price too much. I don't read into that. I'm not big on all those kind of scams and everything kind of going on. I just follow price action and volume because prices. is what pays a trader, an investor. Who cares about news? You follow the money, you follow the price, the trend, and that's what pays you. Who cares if you're trying to, front run news or what you think is going to happen? To me, that usually news follows the trend, and if the news is against the trend, that dip gets bought right back up later in the day anyway. So I don't get into all these different kind of ideas that people have in trading around news. I just stick with the actual price and volume and momentum, and follow whatever leads that investment. For example, gold miners lead the price of gold. So I keep my eye on gold miners and the volume and what they're doing. And then usually a day or two later, that momentum shifts into the actual gold itself.
Yeah, and we're living in a world, that 85% of all news stories, perhaps more, are planted by somebody or other who has an interest in getting that viewpoint out, whether it's you should take this cruise ship or stay in this hotel, or you should buy this stock or sell that stock. All these stories get planted by one party or another. So following news is really hazardous to your wealth.
It is, for sure. I totally agree on that. And generally, if you're following the big money, I follow the time and sales, and I follow futures volume very closely because I find those are the most solid, hard facts of where money's going. And I only follow orders over $1 million on most investments that I'm following. So I'm only looking at what the big money is doing. And, you could say the big money are the ones throwing these ideas out there and you want to be positioned with them while they're lying and cheating and putting news pieces out and manipulating. So you might as well follow the big money because it's the big money guys who are doing that stuff, right? So
yeah, are effectively, I can't remember who said it. Maybe it was Martin Weiss who said that the real big people, they don't get insider information. They create insider information. They create the news, and the news follows the trends, not the opposite way. And I definitely believe there's a lot to be said for that because, honestly, Chris, if you've been reading the papers, reading the press, over the past 2 years, you would think gold should be going up. There's no reason for it not to be going up. Everything is getting worse. They're printing up new currency units faster than they can be spent. And you'd say, well, precious metals have to go up. And what's happened? Exactly what you don't expect to happen, and exactly the opposite of what you were deceived into believing would happen.
Yeah. And there's a whole other side of the story you can kind of look at, or a viewpoint, which I always think about, and it could very possibly play out. I'm not a gold bug. I don't think gold has to go to the moon. I just follow the more or less short-term price action on the daily and weekly charts. But if you're really going, I'm obviously outside of America. I'm in Canada, so I don't have the viewpoint as Americans are very very negative, and the stuff that I hear when I go over there and you talk to them, it's very different mentality than what we have over here. And when I look at the markets, all I see is, you've got poor economic numbers, most countries do, but they're not really getting that much worse. Unemployment, we had a bad batch last week, but overall, companies have record cash. There's record investors sitting with cash. Like, there's so much money that could be put to work, and things are slowly coming around. And a lot of countries have now, they've all gone bankrupt. They're all kind of clearing their slate. They're trying to figure out a way to do it. That fear, in my opinion, is more or less pretty much over. Everybody knows about it now, and everybody's working on solutions, whether one gets made or not. The world's not going to just fall apart. There's always new rules, new things that are going to happen to stop everything from completely collapsing. And really, if every country now has been more or less bankrupt and we're all kind of bottoming out and economies slowly trying to stabilize, why get into gold when, everything, we're starting on a fresh upswing here? It's a totally different point of view, but it's something that investors aren't looking at all. And usually when there's such an extreme, everybody's so pessimistic, you get the complete opposite, which is why, gold could be breaking down. We've got the U.S. with record cash sitting in the banks and companies with huge money, and the companies are streamlining their employees. There's a lot of layoffs going on still, and companies are making more money with less employees, and it's not good for the economy really. But overall, things are kind of firming up in one way.
Yeah, well, that remains to be seen. It's nice to talk to somebody who's optimistic about things, but really the cool thing about your system, Chris, is that it doesn't matter what you think, because you're not trading on thoughts or feelings, you're trading on facts.
Yeah.
And, as far as, where the euro winds up, where these countries are going to be, I don't know the answer to it. It seems to me that the debt problem really isn't going to be addressed. It's kind of like a person checks into one of those fat farms, and then when the lights go out, they sneak off to McDonald's and have a Big Mac with cheese and a shake and a extra large fries, and then they get weighed at the end of the week and can't figure out why they've gained weight at a fat farm. Yeah. So, until the monetary authorities really address the debt issues, and that means the politicians have to address them, I'm not overly optimistic. I don't believe that, unlike past credit busts, that really you can grow your way out of this. But from the standpoint of trading, it definitely makes it more interesting and probably increases the profit potential when you follow the numbers and follow the money.
Yeah, I think so for sure. But, if things start to fall apart here, gold and silver and miners are set up to explode to the upside. Right now they're sitting at a real tipping point here. And if prices drop down much lower, I think the upward trend in them has stalled out and has reversed to the downside. But if they can find stability here in the next month or so, I think they are set to explode, and there's some good dividend-paying gold stocks, and of course, there's a lot of potential percentage upside just alone in gold, silver, and GDX, these gold miner ETFs that hold all the miners. So we're waiting. We're just kind of waiting for this shift for equities to probably top out a bit here. Scared money is going to start flowing into gold miners, and we'll probably see bonds go back up altogether here.
Yeah, and then, of course, the news will recognize the trend after it's already occurred.
And everybody will pile on and create that blow off top, where we'll see possibly, gold, silver, gold parabolic and just, explode to the upside, which is perfect. It's what you want. It's the cycle. That's the way stocks always move and investments. It's
human nature, totally human nature. So up next, we're going to talk about these energy prices, because those are perplexing to me, much as the precious metals markets are. I want to welcome our new sponsor, Audible. I've been listening to audiobooks from them for over 5 years now. I am a huge Audible fan. In fact, I've bought multiple platinum memberships. Platinum membership, you buy 25 audiobooks at a time. I just got done listening to the first 3 or 4 books of the Jack Reacher series, the one you probably saw, or maybe you didn't, in the theater, Tom Cruise movie. Just a wonderful book, wonderful series, expertly narrated. And so many times I'm in the car, I get sick of listening to music or news or the radio. I just put my iPod on, plays the book, and makes that trip go by so quickly. To me, this is one of the great things of the information revolution of the internet, is that you can get over 100,000 books on your iPad or iPod or iPhone instantly. Another thing that they have is courses on Audible, the Modern Scholars series. And I've listened to lectures about World War I, Shakespeare, nanotechnology, detective novels. It's so enlightening. To me, Audible is a must-have killer app for the iPhone, the iPad, for my computer, wherever I am. I'm always downloading these books. Like I say, they're a sponsor, so check them out. They've got a free audiobook and a 30-day free trial membership. Just sign up at www.audiblepodcast.com/Lutz, L-U-T-Z. Again, audiblepodcast.com/Lutz. Sign up today. Like I say, this to me is a dream sponsor. These are exactly the types of things that I like to pass on to you, because I'm such a fanatical, over-the-top Audible user. 5-6 years I've been listening, hundreds of books. I used to think I was a well-read person, and it's a little strange when somebody asks you, did you read that book? And you have to say, well, yeah, well, somebody actually read it to me, but they actually did a better job than I could have, so I don't mind it. But my friend Sean Perger up in Vancouver, he listens to almost as many as I do, and he can't get enough. I know you're going to love this company, love their service. I do. So check them out. audiblepodcast.com/Lutz. We're back. And so Chris, what's your feeling on the energy sector? It was making a bullish pennant, right? It's been trading in this like sideways channel for a year or so already, and seemingly going nowhere slowly.
Yeah, if you look at the energy sector, like the XLE ETF, it's been really forming a bullish pattern on the weekly chart over the since really 2009, and it's starting to break out as we speak. If it can get momentum here, it could really take off to the upside. But again, that's going to coincide with what the broad market does. And I think the S&P 500, the Dow, the NASDAQ, I think they're all ready for a little bit of a pullback or pause of 5 or 8%, and before it can really continue to go higher. If we look at crude oil had the peak back in 2008, the bottom sell-off low in early 2009. We've literally come all the way back up, and we've been trading right in the middle of that range in a more or less a bullish pennant. But it's been trading sideways for 2 years, and it's not something you want to just jump in and hold an investment, because it could be trading sideways here for another year or two before it breaks out. So really what we're looking for is for crude oil to either break to the upside or to the downside. As soon as it starts to break with some big volume behind it, then you can get on the move, and you should be able to catch a multi-week run that's got huge percentage gains, and the energy sector stocks will follow suit. But we have to wait for a break in either direction.
Yeah, and that, like you said, could be a long period of time, or it could be tomorrow. You don't really know that.
Yeah, the price is working its way into an apex, and it's getting right into to an area here where in the next month it's going to be forced to break out in either direction. So we're starting to get into that time zone here where something's going to pop soon, and it could coincide with the S&P 500, which I think is going to start putting in a top. Could have started to put in a top yesterday, and over the next month, as the upward momentum in stocks slowly fades out, we'll probably see crude oil break down to the downside along with equities. And probably a move to the downside is my opinion for oil.
Yeah, so you're thinking you're a little bearish on it then, huh?
I am, yeah. I think the U.S. dollar's got some strength behind it, and it's on the edge of popping up a few cents here. And, of course, a stronger dollar is going to put some pressure on crude oil for sure.
Yeah, we didn't really talk about currencies or the dollar, but interestingly enough, the dollar broke 84 recently. It was really stable against the euro last year, barely moved one way or the other. The currencies, not a lot of volatility other than the Japanese yen with what's going on there.
Yeah.
And really the dollar's the linchpin of all these other markets as well.
It is. And the U.S. dollar's got potential here to jump another 4 or 5 cents really quick within 2 or 3 weeks here. And if it does, that's going to put some pressure on precious metals. It's going to put a lot of pressure on crude oil. Really, we've seen stocks like the S&P 500 move with the dollar more times than not. We've been seeing investors move into the dollar. They want to own the dollar because it is a bullish looking chart. And they're also moving their money into U.S. stocks because obviously you get into stocks that are U.S. based, you not only make the stock gain percentage, but you also make your currency that you own it in is going up. So we've been seeing money move out of international stocks and currencies and moving into the U.S. dollar and U.S. dollar based stocks, which is a very good sign for the U.S. It just shows people around the world are more comfortable with the U.S. than they are in their own country. Yeah,
the best looking horse in the glue factory, I guess.
Yeah, if you look at it like on a PE ratio, the U.S. is the most overvalued out there, and it's the most likely to pull back. And again, we're working our way near a top here, but we're still in an uptrend, and it's still marching away. We're at a little blip yesterday and this morning, but so far it's just a blip, and the trend remains up.
Yeah, when you got the yen imploding and you got the euro teetering, and effectively, like Martin Armstrong said, the dollar is the only game in town when you've got huge amounts of capital that you need to store for a period of time. you aren't going to the euro. You're sure not going to the yen now. You're putting it in the dollar. And it's the inverse of the yen and the euro. And interestingly, and this is an aside, but you probably heard the Apple hearing where they were being berated because all of this money isn't repatriated. It's going through Ireland. They're paying no income tax on it, blah, blah, blah. You know the story.
Right.
But a company like Apple, has reaped the whole benefits there of this, although a rising dollar is not helping their unrepatriated funds overseas, but they've got a lot of it hedged. They're hedging, they've got the smartest money managers in the world there. They're hedging against a rising dollar, and their stuff keeps selling overseas. So they've got $100 billion overseas, but really they got no place to put it. And that exactly points to the trend that you're talking about there of a rising dollar.
Mm-hmm. Yeah.
So in any event, we appreciate you coming on the Financial Survival Network. People want to find you, contact you. Where's the best place to go?
Yeah, you can find me and follow my weekly reports at thegoldandoilguy.com. And I usually post a weekly article or two with whatever kind of is moving and what has some potential for the week to be watching and looking for. Sometimes I post a video on my blog that kind of covers everything of what's unfolding for the week, so you can kind of get an idea of what's going on for the VIX and oil and natural gas and precious metals. So I kind of cover everything each week, just so you're in the loop. You understand the technicals of technically where things should be moving this week, the ranges to be looking for.
Hey, and I've been following you since I discovered you off of Kitco and your commentaries that get picked up there. And you're a real savvy, from my experience, a real savvy observer of the day-to-day machinations of these markets, because, there's some people that could take the longer perspective. There's others that, more short-term focused, but your insight's pretty uncanny, what the trends that you see emerging before virtually anybody else out there catches them. So thanks for being on. We will talk to you again real soon, sooner than last time, and take care.
Thanks, Kerry. Appreciate it very much. Had a good time.
This show was brought to you by Audible. When it comes to audiobooks, there's only one place to go. That's audiblepodcast.com/Lutz, audiblepodcast.com/LUTZ. Sign up today. Get a free 1-month membership and a free audiobook. And send us an email. Let us know how you like that book.